Hey everyone, Rowan Smith with the Mortgage Center. I want to talk today about CMHC fees, specifically when they apply, what they are, and if there's ways to avoid them on the next purchase. So first off, what is it? CMHC, Canada Mortgage Housing Corporation, it's a government organization that's set up and it governs the lending to Canadians for mortgages in excess of 80% financing. So if you have less than 20% down, you will face CMHC fees. These fees are a sliding scale that can range from 1.5% up to 3.35% of the mortgage amount, depending on how much you're putting down. So the more you put down, the less your fee is going to be. Now, these fees are non-negotiable. They're at every single institution. There's no way to go around them. It doesn't matter if you've had a 30-year banking relationship with your institution or not, they will be charged, and the government's mandated that way. Now, if you're going to go buy one property, let's say it's a $400,000 home, you put 5% down, you're a first-time home buyer, you want to take the maximum amortization, that's going to have a 3.15% CMHC premium. So on that amount, you're looking like $11,000 or $12,000 added to the mortgage. Now, you don't have to write that check up front. You don't have to be able to write a $12,000 check. It gets added into the mortgage and you pay it back over the life of the mortgage. However, you still pay it. You pay it one way when you sell the house or whatever. Now, if you move from one house and decide to move to another one and upgrade in 5 years' time, if you don't need any additional dollars, you can port your mortgage over to that home and not pay any additional CMHC fees. However, if you have already paid CMHC fees and you need more money, it's going to be the lesser of, there's a calculation, okay? But you only pay CMHC fees on the new dollars that you borrow. So if you're going from a $400,000 home with 5% down to a $550,000 home with 5% down, you would be borrowing that difference between your old mortgage and what you need on the new one. You're going to get CMHC premiums on that amount added again to the mortgage. Now, if you go sell that home and then subsequently 6 months later go and buy another one, you can apply for some sort of a rebate through CMHC. Now, how they calculate that rebate is not really precise. It's something where I've had to send it in to them and they've kind of come to an agreement. But if you've already paid CMHCs before, you should be able to get either a rebate or a reduction. Now, I've got a client right now who's in a situation where they're selling a place, moving to a new home, and they're requiring a significant increase in the funds, but the bank would not let them port that mortgage over there. It had to do with the type of product they had, the internal policies, and it upset the client, so they came to me and said, can you do our mortgage instead? I showed them, and they said, well, wait, we've already paid CMHC fees, why do we have to pay it again? Now, if you're going to port your mortgage from house 1 to house 2, you can do that. The problem is that you have to retain the original amortization of that mortgage. So if you had a 35-year mortgage and you're 4 years into it, and you decide to go to the new property, you're going to have to retain that 31 years of amortization. Now, if you're like many people in Vancouver, you need a full 35 years to qualify in order to get approved. If that's the case, you'll have to pay it off, pay the CMHC premiums all over again. If, however, you can get qualified and approved without adjusting your amortization, then you can move it over there and not suffer the CMHC premiums. So, clear as mud. I'm sure it's a complicated topic, but if you have a situation where you're worried about paying CMHCs twice, please give me a call. I can run through your options. Rowan Smith for the Mortgage Center.